I think I'll do one more video. Why not? Because this is interesting stats here. And I'm a stat kind of guy. You know what I'm saying? Um, let's see. This is from wolfstreet.com. Consequences of leaving interest rates very low for a long period of time. I guess the Bank of Canada Governor Marco Polos. A litany of problems from too much debt to deflating housing bubbles in Vancouver and Toronto. Now, here's the thing, though. This isn't just about them. We're talking U.S. too, okay? The same thing can be applied anywhere. And when you hear the numbers of debt, how much every dollar someone brings into their household, how much is owed in debt, you have to ask yourself, how does this end? How does a person ever get out of debt? Only people who have extremely high incomes can get out of debt, or you win the lottery, you get some kind of, you find a treasure, what are the chances of that? Come on. Everyone else, sorry, you're in debt the rest of your life, and it's only going to get worse until something gives and everything freaking implodes. Anyways, let's continue on with this. By Steve Saratsky, Vancouver, Canada, Van City Condo Guide. With the Bank of Canada's overnight interest rate stalled out at 1.75%, lower than the rate of inflation, by the way, and leaving real rates stuck in negative territory, monetary policy continues to deliver stimulus to an incredibly long and aging economic expansion, one which has witnessed record debt accumulation. That is, at least according to the Bank of Canada Governor Stephen Poloz, who delivered a speech in Montreal this past week. He ironically reiterated the consequences of a prolonged negative interest rate environment. We have seen the natural results of leaving interest rates very low for a long time. For one thing, this has been hard for people such as retirees who rely on interest from their savings for their income. Further, people have taken on a lot of debt, mostly in the form of mortgages and home equity lines of credit. By 2017, the ratio of household debt to disposable income had hit a record. This is Canada right now, but again, don't look. Oh, well, the United States, we're not in debt. We don't have interest rate. Oh, yeah, actually we do. Oh, we do have high-priced housing, and we have mortgages. We have people up to ears in debt. We have 1 point something, trillion, whatever the hell it is, in student loan. Oh, come on. This applies to all of us. Maybe these numbers aren't exactly the same, but it applies to all of us. By 2017, the ratio of household debt to disposable income had hit a record, with the average household owing more than $1.70 for every dollar of disposable income it had. So you owe $1.70. This is all I got left after I get my paycheck and all the money comes in. I got $1. Well, you owe $1.70 though. Ultimately, right? If we remove households that do not have mortgages out of the stats, right? Oh, you guys are included because you don't. Let's take you out. Just those people who have mortgages, right? Get ready for this. If we remove those people without mortgages, the ratio becomes much higher, close to $3 for every dollar of disposable income. So $1.70 turns to $3, nearly $3. And house prices were rising extremely quickly in some of Canada's. I always say that. I always tease Jean-Claude about Canada. In some of Canada's biggest cities. Indeed, the Canadian debt story has perhaps grown tiresome, yet a recent report from Bloomberg Intelligence further reminds us the debt problem won't be going away anytime soon, despite continued warnings with little repercussions to date. Per the report, the share of uninsured mortgages and home equity lines of credit, or HELOCs, at most big Canadian banks has crept up to 65% of their mortgage portfolio. CIBC takes the cake, with uninsured loans reaching 66% of the mortgage portfolio and total mortgage lending accounting for 60% of all loans. Nearly half of its lending is dedicated to Ontario and British Columbia. However, recent shifts in the housing market have awoken debt skeptics and policymakers alike, most notably Mr. Polos, who admittedly was caught off guard in his most recent speech. Housing activity has been a little weaker than we expected recently. Mostly, it is housing resales that have been soft, suggesting there may have been more froth in certain housing markets than previously thought. Froth? You want some cream on top? no froth in my coffee. No thanks. No froth. National home sales were down just 4% year over year in January, the slowest January since 2015. However, as Mr. Pellos noted, Canada's once frothiest markets have elicited significant weakness. The Vancouver housing market witnessed sales sink into a 18-year low in 2018, while home sales in Toronto area slipped to a 10-year low. Rest assured follows eased market jitters, confirming, quote, housing markets that were not experiencing bidding wars appear to be adjusting in line with our expectations. However, more data will help us better understand the full situation in Canada's housing market. In other words, I'm probably lying to you. The numbers are terrible. It's awful. But I'm going to say that we need a little more data. You're going to need a little time to look at things over. Doing what a politician does best. Kick the can, fudge the numbers, say we need more data, even though you don't. You know the truth, but say you don't. That way, later on, when the problems really occur, you can say, oh, here's the new data. We got the data. We got the data, guys. It really, all those comments I made, the good comments, should have been bad comments based on the new data, but I didn't have the data at the time. So, here's the data now. But by the way, I'm leaving. There's new prime minister, new cabinet, new everybody coming in. I'm out of here with my golden parachute, big retirements, all the campaign contributions I got. I'm going to keep them all. So thanks for that, Indeed, more data is just what the governor ordered. Mortgage delinquency rates, a lagging indicator, remain relatively benign in Canada, although a recent uptick in December, along with an increase in personal bankruptcies over the prior 2 months, suggests the bottom is in, and we are moving higher from here. By Steve Saretsky, Van City Condo Guide. Average home price fell for the first time since 2008. Largest decline in the data going back to 2001. Read Canada's majestic housing bubble deflates. Media hyped U-turns. What's that about? That was posted a few days ago. Average home price in 2018. This is Canada, or as I like to say, Canada. Fell for the first time since, again, when? The recession. 2008. Largest decline in the data going back to 2001. National home sales across Canada slipped for the second consecutive year, dropping 11% when compared to 2017. It was indeed the steepest annual decline since the financial crisis in 2008. As a result, the average home price leaked lower to $488,699, a 4% decline from last year. Now, hold on. Vancouver. But it says national home sales across Canada slipped, okay? As a result, the average home price is $500,000 in Canada? Or is that Canadian dollars? I see the dollar sign here. Maybe they meant Canadian dollars, but still. A 4% decline from last year. The decline marked the first year-over-year drop since 2008 when the national average slipped a mere 0.71%. The slowdown prompted the concerns of RBC's chief economist Richard Hogue, who put a particular focus on the nation's most expensive housing stock. Okay. Bearish sentiment protruding from one of Canada's most respected bank economists warrants further discussion as to the role of behavioral economics within financial markets. What? Yeah. Behavioral economics within financial markets. I can just see the politicians. The behavioral economics with financial markets and our analytical data we're waiting for. So what does that mean? It means we hope you don't understand what we mean. We're talking out of our rear end. We're going to use these big fancy words, some we just create out of nothing. Kind of like the money we just print out of nothing. And we hope it sounds good to you, even though we know it's not. And it's so confusing, you don't really ask questions because you don't even really know what to ask. Canada has politicians. The U.S. has politicians. Everywhere has politicians. And they all do and say the same stuff. Bernanke, remember old Bernack? Didn't see this coming. Housing, we never saw it. Nobody saw this. There were quite a few people who saw it. Quite a few people who raised the alarm bells. None of them which were your Ivy League, Princeton, Harvard, Yale, bullets, bombs, and banks, as Gerald Celente loves to say. Your Ivy League guy, nobody saw it. Oh, yeah. Or did they see it and they knew it, but they have to come out and lie to your freaking face every single time. The numbers suck. You'll be in debt the rest of your life. It's not going to be pretty. Just go get your new car every few years. And if you don't like the car, even though you owe money on it, just trade it in for another car. Put the remaining balance on top of the new car. Get yourself an 8, 9, 10-year loan. And just leave us alone. Politicians, leave us alone. Go get your vaccines. Go get your vaccines. And leave us alone. Go to the job. Watch your movies. Go to the beach. And just let us do our stuff. Until it gets too painful. Until the burden gets too painful. Again, when you spend most of your money on your mortgage or rent or whatever, housing, people will spend more money if they have more money to spend. Even if they're not big spenders, you will spend more money if you have more money. So at the end, okay, what do we have left? Oh, we got a whole bunch, I've got half my paycheck left for the whole month. Oh, great, every month. You're going to be doing good. Let's go out to, instead of going out to dinner once a week, let's go out 3 times a week. Let's go to the movies. Let's go, your people are going to spend. They're going to stimulate the economy. The rest of the economy is going to do well because people are spending. But if those same people who need to spend to stimulate the economy on a continual basis are spending most of their money on the biggest thing they have, debt-wise, house, that leaves very little for anything else. So what do? Pull out their credit card, student loan, this and that. And then what do you find with the kids with the student loans? Well, I kind of wasted the money on this, or I bought it this. I probably shouldn't have. That's all right. I got my whole life to pay the debt off, and then they don't. Their whole life, they're fighting garnished wages, whatever happens. It's just ridiculous. This is why cryptos, I think, will save many of us. Cryptos, at some point, will get us to where we need to be. That's what I think, anyways. Right? Been saying this for a long time. And many people in our family may be coming to us because they'll be the debt slaves who didn't really want to take a big leap into cryptos. I got in, but I got out. The thing dumped. I lost my money. Didn't wait it out. Didn't listen. But you have so much, potentially anyways, right? Wealth in crypto that you can afford to help the rest of your family out. That's how I look at it. Like, okay, I'll have all these crypto. I don't care. My sisters are get in, get out, selling. My dad, whatever. I only need me to do okay with crypto to take care of everybody else. But it would have been nice if I could just tell everybody else, you're going to hang on to this for a while. And then everyone's panicking. Oh, the market's dumping. Everyone's panicking out. Look, if you want to sell because it's going down and you want to get in lower, all right. But don't sell because your emotions are telling you to sell. And no, I'm not playing that game ever again. You're supposed to, I told you, just sit on these. Don't ever look at it. Just leave it alone. Don't even bother. I don't even want you trading in and out. Just leave it. Don't touch it for a few years. And they're looking at it all the time. Oh, it's going down. Even the stuff I gave away to my family for Christmas. I'm talking 2017 Christmas. Most got rid of it. Oh, I can't take it. I can't. All right. Whatever. It is what it is. Anyways, take care.